Friday, January 5th, end of the first week of January. Market analysis, Stan Ehrlich. Good morning. This is a little early for me this morning. It's 9:30 California time. I usually do the recording around 9:45, 10 o'clock. So we're a little bit before the middle of the day. You guys know I start out with the stock market indexes in general, and then go to some special topics, sometimes cycles, seasonal tendencies, whatever. And then the futures markets. So here we go. You can contact me, ask questions. Maybe you want a particular stock, commodity, whatever, analyzed. I'll see if I can do that for you. Send your email to info@ersignals.com. So the electronic overnight version of the NASDAQ and the E-mini, and you're looking at the March futures contract E-mini, made significant lower lows. But this morning popped back and actually popped up and made some minor new highs, or tried to, in the various indexes that you'll see, and failed to get above yesterday's high. A couple of them got extremely close. This is pretty close, but it gave it all away and is now back down to almost unchanged on the spider, only up a few ticks. We are now down a point almost in the DIA, and just a little bit higher at the moment on the Qs. I think they're going to turn red, negative, lower on the day while I'm giving you this YouTube. And the spider just did it that second and is now unchanged. Everything is dropping off pretty quickly. So let's go to our next chart. That would be the SPY, and it is about to make lows lower than yesterday, and it looks like it's going to do it. That means from the high day at resistance on December 28th, second to the last day of this year, we have gone down 1, 2, 3, 4, and today I think it's going to be 5 days in a row. The overbought conditions we had were pretty darn significant, but I'm still expecting only a correction on a short-term basis, maybe 1 to 2 weeks at the most, time-wise, and to the price levels starting at 463 on the spider. And I should go back to the E-mini to give you the same numbers here because it's a popular futures contract, of course. I'm looking for a move down to 46.52, but that's the beginning of the low I'm expecting in the next several days, or maybe a week or two. There's a possibility of it slipping off to 4,600. Much below 4,600, I frankly don't think we're going to get to, but it's not out of the picture, not out of the question. But probably one of these two at 4,650 to 4,600 is going to stop this break. I don't think it's going to be the bottom of the current support area I've got showing in the red zone, and that would be a little under 4,700, 4,690. I don't think that's going to stop the break. I think it's going to drop off a little bit more. Back to the spider. So I'm looking for 463 even, or maybe 454 for the end of this minor short-term correction. And then by the end of January, probably a new high ground, or sometime in February, early February, for the whole trend. So this should create a dip that would be a good buying opportunity, period. Next, 5-minute chart on a spider. Only got a couple of days in data here. I'll actually load a lot more. Let's go with 40 days. And that should fill up the screen. So here we are, trying to make lower lows than yesterday's lows, and also new lows for approximately 3 weeks. That looks toppy. Adding to the fact that we were at resistance areas is definitely a toppy situation. The DIA is a little stronger. It's not actually close to the lows made on December 20th, which was our bearish engulfing ER sell signal. And I need to make a mention here. The March futures contract had bad data yesterday, And I was looking at what I thought was a bearish engulfing on the daily data charts. After further review, so to speak, no. We only have one bearish engulfing in most of the indexes, and I believe it was all of them on December 20th, and that has been it for the signals. And then most of them, if not all of them, made new highs, but not by too much, and it didn't last, and it got overbought, and here we are in the DIA, a new low for a week and a half. So it's holding up a little better than the spider, and the Qs are the worst. We'll look at them in a moment. The Russell 2000 actually is the worst. It's already come down, closed a gap, and dropped off to new lows and below all previous lows right now. But it bounced off another support area. I don't think that's going to hold because I'm expecting more weakness than the other indexes. So I'm calling for the Russell to come down to 189.70 and very possibly 187.87. That looks very reasonable to me in the next several days. Next, QQQ, daily data chart, has a little bit of support starting around 388.90, 389, and I do think that's going to be reached soon. Not necessarily today, but in the next few days. And there's other support levels a little under that. Now, there's also a gap, a little unusual, to close, and that would be around 378. So that is definitely in the ballpark of my downside objectives on this short-term correction. I'll call it 378 and a half-ish for my best shot as to where it's going to stop going down and turn back up again. Next chart. NASDAQ futures contract, first stopping at 16,034. I'm expecting, as far as the bottom of this dip is concerned, and let's see what happens when it gets there. There's certainly other price levels at which it may test a little bit lower, but nothing super bearish. Next, the 5-minute QQQ, almost making lows lower than yesterday, very close. Let's go to the poor Santa Claus rally, which did not work. And this will be the last time I show this chart. The track record is in the ballpark of 70 to 75% of the time. In the last 25 years, you've made a profit for the Santa Claus rally, buying 1, 2, 3 days, one-third before Christmas. And it was at 7:05 a.m. we bought it, 7:05 a.m. we bought it, and 7:05 a.m. we bought it. Hold it after Christmas through the end of the year, and in the first 3 trading days of January, we sold out at 6:45 a.m. and it lost money on the first entry and the first exit. We sold the second one at the same time, 6:45 a.m. 2 days ago, and it lost probably the least amount of money. I think it was only a full point. And we lost the most on the third and last and highest entry, unfortunately, was the lowest offset, and it lost the most. The track record, and I'll show you TradeStation's numbers coming up, was a 3.10 loss in the first trade, a 1.01 loss and the second, and a 6.04 loss in the third, so a total of about 10.15 total on all 3 combined. Not good. Sorry. No guarantees. Past performance is not indicative of future results, and hypothetical returns have some inherent limitations. Standard NFA CFTC disclaimer. And I'm disappointed like everybody else. Futures. Next year, it may, or this year, I should say, maybe it'll be great this coming Christmas. Quite a ways away. The first chart is the E-mini daily data, and now this is a continuation contract, or what's also called perpetuals. They don't expire. They automatically track nearby price levels on usually the first 2 contract months, averaging and acting like up and down movements, percentages, that kind of thing. Very, very, very similar to what the exact futures contract is doing, but they don't expire. So they've got a tremendous life. all the way back to the beginning of the E-mini to do analysis on. In particular, great from a cyclical standpoint. Cycles. Again, you got questions, you want me to analyze something, info@ersignals.com. Boom. Looking for the retracement to support. Same thing for the NASDAQ. I went into detail already. NASDAQ futures 15,900 on the NQ continuation contract numbers. But the others are going to bottom out at the same time this does and top out and bottom, et cetera, et cetera. Next is bonds. Down significantly around the middle of the range, dropped off quite a bit. Now, this is despite the fact that everybody by now knows that the unemployment numbers are pretty good. The rate of unemployment stayed the same, and the number of jobs created was better than expected. That's what basically, probably, and I'm not a fundamentalist, helped cause the rally that we had this morning that is gone, because now we're basically unchanged on the spider and the Q's up very little. They were up about 3 points, full points, and the DIA is still down almost a point. So I think bonds have a little bit lower to go, but now we're talking about RSI getting close to resistance. I'm sorry, to the oversold level support, if you want to look at it that way. And maybe bond futures will get down to my support area at 119. But there's a chance that a little bit higher, although it's not as good, in my opinion, support at 120.20 30 seconds might hold. And we already got kind of close to that this morning at 121.09. 10-year notes were finally out of our fantastic long position from the low of the move on December 23rd and got a ER buy signal, by the way, in bonds. On the same day, we got a bullish engulfing ER buy signal, and you can't do better than the low day of a bear market and the beginning of a bull, in my opinion, a bull market, which has gone up substantially now for 2 months. Good. This looks like the biggest, probably the biggest correction we've had so far. But it's okay. It's from very overbought conditions and totally expected and predicted. So like the indexes, I'm not looking for any big bad move down, just basically to support. You might even get a Fibonacci retracement number to come into play next. And we'll go past 10-year notes now to the crude oil. Not much going on. I haven't gotten a signal for quite a while. We've got overbought, oversold. We got support that's bouncing. And I think this bounce could come up maybe even to 80 again. Take a couple of weeks to do it. Probably get overbought in the process and go right back down after that. So we're kind of getting stuck here a little bit in the last couple of months between this support area and this resistance area. Next, natural gas, total collapse, super oversold conditions down to 7-ish. You don't see that very often. So no surprise, this rally is carrying all the way back almost now to what I thought was possible, but not very convincing about it when we were down here on December 13th. Now on January 5th, it looks like it's easy to do. And that would be get all the way back up to 3.0 and small change, the major resistance area that I do think is going to be reached. And I do think it's going to stop this rally, but we're already now overbought in the last 2 days. So it might run out of steam a little bit earlier than the resistance area. Next chart, natural heating oil. Between the top of the wedge, downward slanting wedge, and the bottom, it has just been the last couple, 3 weeks. Oversold, touched the bottom, reversed, got up to the high, touched the high of the pattern, but not quite overbought, came close, stopped, came back in only halfway this time. Interesting note, not making another low to the bottom of the pattern like you might have expected. It had a bullish engulfing 2 days ago, but not one of my signals. It came very close. Is it going to break the line this time, come up into the resistance area and break above 2.77 and higher? I don't think that's out of the question. Not sure. I have to wait. Next, gold. Support seems to be doing a good job here. Dropped into the middle of it and now higher on the day. Big range. Almost a bullish engulfing. Doesn't look like it's going to quite make it now that it's pulled back quite a bit. So I'm going to wait on gold for the moment, but I can't help but keep you aware that there's a possibility of a head and shoulder top in silver and gold. This would be the first shoulder, which I'm not convinced totally of yet, with a bearish engulfing ER sell signal in it, which is classic. That's great. Plus, we got the bottom in green. That was a bad signal. We got the bottom in green. We got the top red. We got another bottom back here to the exact days. We got the beginning of a break back here. So I'm not in a condition to get a signal, but this could have been the last shoulder high, which oftentimes does not have a signal because it's not that overbought on head and shoulder top last shoulders. The head of the formation was a whopper of a bearish signal. Now I am finding that my data may be a little too high for the high of the day. So even though I've researched this on other platforms and other futures contracts, specifically, the high is still higher. And in that case, we still have a bearish engulfing red sell signal. It's just not quite up to that high price. It might be around here a little bit more. So I've got to double check on that. Bad data can be a problem sometimes for people who have been used to trading on platforms for quite a while. You discover them occasionally. So do we have a head and shoulder top in gold? Yeah, maybe. Next, silver. Do we have a shoulder? Do we have the head with a bearish engulfing on the very top? Do we have a shoulder? And is it trying to break the neckline? Yeah. Did it hold up on a closing basis on a breakout? It didn't break out. It closed above the neckline, although it's sure as heck teased with it for 1 day, 2 days, and today. But now we're moving up a little bit more. So as long as this rally doesn't carry for more than a few days and much higher, you don't want too much strength and you don't want too much time in this. And it starts to turn down again. And the first time it closes below this blue neckline, that's it. The minimum downside breakout, downside objective would be to the bottom of this chart scale, if not, frankly, a little bit below that. I haven't done the measurements yet because we're not breaking out quite yet, but I gave you the ballpark. It would be making new lows for a long number of months, a couple of years plus, in my opinion. Next, platinum. Overbought turned it down. Not particularly an important price level per se. We've gotten a great buy signal, great sell signal, very good buy signal, excellent buy signal, the top high, the low, low, some tops almost to the exact high. That one was almost, that was very close, and some lows as well. My signals, which are red and green bars or candlesticks, happen frequently at the highest high and lowest low of big and small turning points in the market. I developed the strategy to do exactly that, but many of the red and green candlesticks or bars occur close to the highest high and the lowest low, and or part of the topping out or bottoming out process. So they're not necessarily to be ignored, even though they didn't work quite as accurately as you would like at the time. Next, high grade, copper. Boy, it's toying with that trend line that had broken a few weeks ago. Right now, sitting on the low of the day, on the line, low and last, and a new low for a couple of weeks. This would be a prime spot, perfect for it to turn back up again. I'm not seeing any other particular reason for it to do so that points out that this is an exact price, except for the line, to do that. Otherwise, we're between the rock on the top here and the rock on the bottom, a hard spot, and we might be bouncing back and forth in this trading range. So no opinion at the moment as far as trade's concerned. I'm still slightly bearish, even though we're at that line. I just had to point that out. Soybeans, new low for months since the summer, June. Probably going to be a new low close again, like yesterday, but in oversold condition, but not too badly oversold. And since this appears to be a major bearish breakout, we could sink a little more for a couple of days here. It's Friday. We might see the rally starting on Monday. We had a bullish signal. It worked for a couple of 3 days, not very well. And we didn't change the stops. We didn't tighten them up real fast. So we ended up losing, in this particular example, a little money on this particular trade. This was perfect. Bottom of the break, 2-month rally. That high was perfect. Great big move down. That was a good buy signal, not the bottom, but certainly immediately afterwards produced a big rally. That was a small rally. Okay. So beans could bottom out at any time because of the oversold condition, but it don't look like it. I wouldn't be buying it yet. That's a prime target for a buy signal, but it's not happening. I think it'll slip off some more and then turn. Next, bean oil. We got, past tense, a bullish engulfing buy signal on the beginning of the year, Tuesday, first trading day of 2024. Bought it at almost the exact low of the day, the next day with ER3 strategy. Remember, ER1 gets in the day it turns red or green. We never miss a signal with ER1. It's always in the day it turns red or green. ER3 tries to get in within 3 days after the signal day on a retracement, and this one worked almost perfectly. But today, we do see a minor lower low than the entry day, which was Wednesday. And our trade is now pretty much a scratch trade. No profit, no loss to speak of. Right about like that. Dead flat equity curve. Not stopped out. Crossing our fingers that we're going to see a rally here and start to make higher highs than Wednesday's high. And that would make me smile. But what's wrong here? This is a bear trend. It's a bear market. This signal has no other features that I can come up with that tell me that this is the bottom of a brand new bull market that's going to go a lot higher. That's not the case. All I'm going to get out of this, I think, is a rally up to this resistance level, and it's going to stop and turn right back down again. I'm still basically bearish, but because of the signal, I have to expect a little bit more rally than what it's had, what, 1 day? Nah, should be more than that. We'll see. But I have to be basically bearish, although right now, looking for a short-term small rally in a bear trend. I'm not getting even that at the moment. Next, meal. New low close, oversold. Prime target again for a turn back up. And this is not necessarily a bear market. This is a big sideways trading range we've got for a long period of time. For all practical purposes, it's been developing since August of 22, a couple of years. Yeah, you could say that. Or maybe a little less, but it's very big. So I wouldn't be surprised if it came all the way back down after a little bounce to 338, 340-ish, where it bottomed out twice before last year. Next, corn. Yep, new lows, keeps on coming down. It's going to go the way of wheat, which is doing the same damn thing. It's not quite new low ground, I don't think. So I'm bearish, at least to this support line I drew in, 456, but that's not far away at all. 4 cents, come on. But that line represents a very profound, major level of support going back on this continuation contract to May of 2021, and showing some useful turning points all the way into February of 2022, January, February of 2022, a year ago. Actually, 2 years ago, sorry. But that's how old this is. Let's see if it has any effect on prices currently. Kind of old, but it's pretty profound. Next, wheat. A little up yesterday and at the moment today, very slightly, 2.5 cents higher at the moment. It's going to make new lows, I think, very soon and keep on coming down. Next, live cattle. We've got an outside down day in progress, not overbought, so no sell signal, except it's a Japanese candlestick bearish engulfing at this moment. If it stays lower on the day, we'll have that bearish implication because of the bearish candlestick, and it could start slipping again. I see no reason why not. Next, hogs. Oversold, bounced, resistance area, probably won't bounce too much more, maybe get up to 73 and then turn down. Next, OJ. We had until Wednesday a whopping great trade for orange juice. We got the first shoulder on a head and shoulder top on October 31st. We got the exact high head, again, the exact high of the rally on the head of the formation on November 21st, and rode this trade all the way down to last Wednesday for a whopping profit, something in the neighborhood of 13 grand on a per contract basis. Now we're seeing it drop off lower in our exit, and I think it's going to make lower lows. The minimum downside objective is 287 from the count based on the bearish head and shoulder top. Next, cocoa. Well, we're about to see probably minor new lows for a few weeks, but I'm not sure that's going to turn the trend down. Next, coffee. Kind of the same commentary. Did get overbought, turned down. Support is not holding anymore. This is going to go lower. I think the next stopping point or bounce point would be around 176. Next, sugar, sideways, no signals, neutral RSI. I have to wait. And finally, cotton, the last one, probably going to test the support area. I don't know if it's going to hold again. Waiting for signals, neutral RSI, not going anywhere quickly. And back to the E-mini and back to our index charts real quick, and pulling up all of my index charts. We just challenged the low of the day, which was earlier in the day, a few minutes ago, on the 1 minute chart on the spider. It's real. The range in the spider today is very, very close to the exact same range we had yesterday, but it is a doji, no higher high, no lower low, inside day, almost unchanged. But we have a little more bearishness on the DIA, the Qs, inside day, bearish situation, Russell. I think we're going to see new lows for the day before the day is over. Profitable trading for you. Mañana.